morning to each and every one of you. So thank you for taking out your time to join our executive breakfast morning session. And also, we welcome you to a new week. Very quickly this morning, we'll be taking us through the activities that transpired in the markets for the week ended 9th of August 2024. Starting this morning, we'll begin with the fixed income market review. Looking at what transpired in the treasury bills and the money markets, we saw that the funding rate took a significant turn from the 2 to 3 weeks bullish run we've witnessed in the previous weeks, as the open repo rate advanced by 778 basis points to close at 3.39, while the overnight rate advanced by 791 basis points to settle at 3.97. What this significantly points us to is that the system is very illiquid. That means the market liquidity suffered a number of outflow for the week ended 9th August. And that wasn't surprising considering the activities that took place in the market last week. We saw that there was an NTB auction where about 216 billion was sold by the CBN. And also last week, I think we had mentioned in our session last week there will be a retail auction by the CBN for the sales of FX. We also saw that took place where about 839 billion naira was worth of dollars was sold by the CBN to the direct or the end users. So those activities in the market last week amount to about 1.1 trillion, significantly damping the liquidity in the system, plus the massive or the significant increase we saw in the funding rates. In addition to that, we also saw a number of banks were exposed to the standing lending facility by the CBN, where banks actually go to the CBN to directly borrow from them. So a lot of other activities contributed to market liquidity closing at a negative zone at the close of the week. So that significantly also affected the activities in the secondary, the treasury bill secondary markets, as activities were not, or would I say subscriptions were not as interesting as we would have expected. At the auction last week, we saw that 216 billion worth of NTB was on offer. Subscription was just roughly around 486 billion compared to previous subscriptions where we've had close to a trillion naira. What that simply tells us is that a number of banks had to divert the funds that were available just to meet their end users' FX needs. So we saw that at the auction last week that the activities, despite the minimal activities we still saw that the stop rate declined against expectation. Because what typically happens in the market is when subscription levels are not as strong as one would have expected, that might have forced the CBN, to increase rates. But we saw a different turnaround at the last auction, and which simply explains why so sales was just marginally around the same amount on offer against the previous auctions where we've seen sales touching as high as 300, 400 billion naira. So on the 91 day, we saw that the rates remained constant, and the 182-day rate also remained constant at 19.5, while on the 364 day, we saw a 21 basis point decline in rates to close at 21.899. We expect that this week would not be any different, considering the liquidity strain we currently have in the market. All these expectations we have, all our projections are based on if there are no significant inflow into the system, which we obviously are not see from now. So we expect that the secondary bills treasury, the secondary treasury bills market will still take the dynamics it took last week, where we saw that the bearish dominated the bulls to eventually close the week at 25.8, and that's about 32 basis point increase from the previous levels where they had. This is also to point to would I say to draw our investors' attention to the fact that whatever investment we need to make, there's no point delaying any further, because we're beginning to see the signs being thrown around by the CBN, and they are not going to keep rates elevated for such a long time anymore. We expect that inflation by July's inflation, we expect to see some marginal moderation in the figure. And I think the CBN chief had made his stance very clear that as long as as soon as inflation begin to subside, we would see some rate cuts, albeit maybe not significant, but we are definitely expecting that once inflation begins to subside or to moderate, we would see some rate cuts, which is a call that now is the best time for us to consummate our investment or any pending transactions that we are looking at. And subsequently, in the bonds market, we also saw similar trend where the market closed bearish. You know, after those sales we saw on Wednesday, Thursdays, we saw the market took a bearish turn on Friday as a number of investors had to put up their holdings for sales, primarily to raise liquidity in the market. So on a tenor basis, we saw that largely the short end of the cut of the curve took the major hit as we saw a 61 basis point decline, sorry, a 61 basis point increase rather in average yield on that end, and while on the long end of the curve, we saw a 4 basis point increase. And from the maturities that were actively traded, we can also notice that most of the activities were skewed towards the short to the middle of the curve. As the 2025 was the most traded, which advanced by about 158 basis points from the levels it was the previous week. We also saw the 28s, the 29s, and as well the 34s. We saw minimal activities on the long end, particularly on the 2050s. But we saw, but most of the activities were skewed towards the short-dated bonds. So at the close of the week, the benchmark bonds advanced by an average of 28 basis points to close at 20.05 from 19.87 thereabout that it closed the previous week. And as you can clearly see from the yield curve, we can still see that most of the activities are skewed towards the short end, with the curve being elevated at the short from the 1 to 3 year, while it flattens out on the 25 to the 30 years bond, which ideally should not be the case because the ideal yield curve should be an upward slope from the north. We expect that all these will moderate itself once the market finds its balance. The foreign exchange market, as anticipated, we saw that the naira strengthened at the official window to gain about 265 basis points. That wasn't surprising. At the beginning of the session, we had mentioned that the CBN sold about 839 billion worth of FX to end users. And the main purpose of that was to reduce the ease, or was to ease the demand pressure from the end users. Prior to these sales, we can see that Naira was already touching about 1620, 1630 before the sales took place on Wednesday. So after the sales, we saw some form of moderation in the demand. Such we saw that Naira strengthened by 42 Naira 88 kobo. 42 Naira 88 kobo. Albeit on the forwards contract, yeah, the forwards contract, we didn't see similar movements, save for the 1 month contract, whereas on the 2 month, the 3 month, the 6 month, and the 1 year, Naira still sustained the bearish run now at this point, with the 1 year contract taking the largest hit to have lost about 194 basis points decline from the previous week of 1,922 Naira 32 kobo to 1,959 Naira 58 kobo. We expect that if the CBN is able to maintain the retail auction, we should see a continued strengthening of the Naira. Although we are still looking at the market to see when further information would filter down on when the next auction would take place. But we'll continue to monitor and keep our clients updated. So expectation for this week, we expect that barring any significant inflows, like I mentioned at the beginning, the funding rates are expected to remain elevated. The FGN bond auction was actually scheduled to hold this week, 12th. Today, rather, 12th. But we saw that some communications came into the market last week, and it has now been postponed to 19th. That's next week, Monday, for the auction to take place. So, barring any significant inflow, we expect that the funding rates will remain elevated. And for the treasury bills market, we expect it to trade in line with liquidity in the system. And with liquidity very tight, we expect that it will close on a bearish note. While for the bond secondary market, we also expect the bearish sentiment to be sustained. So in all of this, like I mentioned, the CBN has been giving indication that the elevated rates would not be around for a long while, which is why I think this is the right time for all our investors to to answer the call and invest in all the various product offerings that we have, from the Lead Fixed Income Fund which is a strictly fixed income fund that invests in fixed income instrument and money market instruments. And for the lead balance fund, I think the equities markets, we saw some bullish run in the market last week, and I'm very certain that all our clients who are key to the lead balance fund must have also seen a reflection of that in their portfolio. So you are looking at enjoying the benefits in both the fixed income space and also the equity space. The lead balance fund is a very good product for you. Also, the lead dollar fund, I think we got a number of tractions on this fund last week. I think for the past 2 to 3 weeks, we got a number of traction. You know, for you have FX, you're looking at where to deploy them to. You know, this is a very good avenue for you to put your funds to work for you. And also the lead gazelle portfolio, fixed income product. You have funds you're looking at fixing for as low as 2 months and for as high as a year. You can always approach us, and our rates are very competitive. That we can assure you, it's way better than what you would regularly get from your conventional bank. And for the Eurobond trading, it does give you an opportunity to also divest to diversify your portfolio by looking at the various opportunities outside your local space, largely the sub-Saharan Africa bonds and some other corporate Euro bonds. You know, these are the various products that we've made available to all our clients, and we hope that you key into them to enjoy the dividends of investing. So thank you very much. We've come to the end of the fixed income market. We'll be going to the equities market review.
So thank you, Mr. Samuel, for that wonderful presentation. So we are welcome to the equity market. So the market gain compared to what we had previous week. We saw a lot of buyback, a lot of increase in activities in the equity space as a result of the corporate actions and results that were posted last week. So a total turnover of 2.67 billion shares worth 49.02 billion was traded last week on the floor of the exchange, contrast to the total of 2.3 billion shares valued at 5.2304 billion traded previous week. So top of our sectors that we covered, the financial sectors as usual also led activities last week with total of 1.9 billion shares valued at 31.985 billion to contribute to 7.5 and 65.2 to the total equity turnover in terms of volume and activities. So top of equity traded last week, we have Access, Veritas Capital Insurance, and United Bank of Africa accounted for 756.04 million shares worth 10.726 billion to contribute 2.28%, 21.88% in terms of total volume traded last week. And in terms of the all share index that measures the directions of the market appreciated by the 0.97, that is 97 basic point last week. And our all share index got to 98,592.12 basic points last week. And in terms of the market capitalization, that is the over total value of the market, it was 55.9 trillion. So let us stop at that and let us use that as a barometer to measure what is happening in terms of volume, in terms of price, what is the market doing. I said, when the CBN came out with the MPR rate, the market lost, and we saw in the LGB, there was an increase in 91, 182, and 365. And that activities led to loss in what? In the capital market. But at the end of this week now, that the capital market has been able to gain back all the losses that as a result of what happened in the money market during that period. So the market has bounced back from 59.985 trillion. That means that loss that we recorded when the announcement was made, that was 5.692 trillion. That was the value of the market. Then we lost 55.605 trillion. That was 25th of July. On the 2nd of August, the market gained back. And we saw as a result of results coming out, the market has gained back. And this is to tell our clients that they should not panic, that the market seems to overcoming the the obstacle and it's getting stronger. And this is the great avenue, this is the great opportunity for people to come in, position in the market. And this will be the barest minimum market can experience. So if you are still doubting, I'm telling you with all confidence that this is the best opportunity for you to come into the market and position. We see that banking result will also be releasing their results, and it will be too late if you are waiting for the result before you take action. So in terms of our sectoral covers, out of the 5 sectors that we are covering, 4 came out positive last week. The banking sectors did 5.14, they gained 5.14 last week, and insurance also did 1.79. The oil and gas did 0.97%, and the consumer goods also closed positive. And we saw the industrial sectors as a result of their poor performance in terms of their working capital, a lot of cost with them increase in the interest rate that is affecting that sectors. They lost negative, that is 3.67. And in terms of the overall market performance, week to date, the market gained, as I rightly said earlier, 0.97%, that is 87 basic points. And month to date, the market also did 0.8%. And in terms of our quarter, what the market has gained in the third quarter, the market has been able to gain 1.46, and year to date, it 31.95. So using that as a kind of a yardstick in terms of return that the market is doing, let us compare what happened so that we know that when can I come into the market. January, the market year to date was 96.95. The market was far above inflation rate of January to be 29.9. And also in February, the market beat inflation. In March, the market beat inflation. In February, the market year to date was 31.27. And we are telling people, please, this is an opportunity for people to come in. The market is not straight line. It is cyclical. There will be a high time and there will also be a downtown in the market. So when the market is down, it's an avenue for people to come in. And April, the market was beaten by inflation. Likewise in May, the market was also down. But now the market has gained momentum and it started moving upwards. So this is an opportunity for all our clients to come into the market, position ourselves. We have seen in February 15, the market has the highest return, that was 41.39, above the inflation rate. But now the market is down below the inflation rate. So this is an avenue for people to come in. On Friday, that is 15th of August, the Nigeria Bureau of Statistics will be releasing the inflation rate. And that also will give us the direction that the market will be going. But for now, we have opportunity to come in, buy now, take position, and I believe as the result will be coming out, you will be compensated for taking such decisions. Let's move to the next slide. And the banking recapitalization is still on today. GTB will be closing their public offer. We have said it over and over, and we have recommended based on our analysis that they are all good buy. From Access Bank, Fidelity, GTCO, FCMB, and Zenith Bank, their capitalizations. It's a good time for us to buy. We have said this over and over again. The offer closes today. GT Bank, for those that have not taken the position, we saw what happened last week. All the banking sectors came back stronger, and they are trading far above the offer right. So we are recommending to all our clients, position today. Call us. We are here for you. Take position in GTB. Is closing today. Today is the last opportunity for you to partake in the offer, and we will be here to answer you. So next slide. So our recommendation, all our stocks have been paying dividend from Access Bank, EcoBank, Fidelity, First Bank, UBA, Stanbic, Zenith Bank. All our stocks are still valid. So we employ all our clients to take position. We saw what happened, diversification. All our stock cover different sectors from the consumer goods, industrial goods, the agricultural sectors. We recommend people more than 2 or 3 months. We told people, let us diversify, invest in Ofumo, invest in Presco, invest in the insurance sectors, maximize the high interest yield environment. All those companies are going to post great result, and they all did. And all our recommendations are valid, and we recommend you to take position. All these recommendations have been sent out, and let us follow them. And we have good return for our investment. And what's our projection, our expectation for the week? So last week, the banking sector seemed to have factored in the effect of the windfall announced by the government, therefore find momentum. So we believe that transaction is also going to increase because majority of them have not released their results. The Access Bank submitted their results to CBN, and that also got them a rally last week. And we also expect other banks also to follow suit, submitting their result to CBN for final approval. Fidelity, GT, Zenith Bank also continue interest in that sectors. And we also expect more transaction in the banking sectors and also in the market generally. So we expect to be positive gain. There will be a positive gain as a result of the corporate action that are currently going on and the what result that will be released in the market. So for the many part of the week and for the week, we expect the market to keep on the pace and to come out positive at the end of the week. And just for some few corporate actions, we know that there are some people that will be paying this week, and we expect Transcorp also will be paying on Thursday. They'll be paying 10 kobo. Transcorp Power is paying on Friday. They are paying 1 naira 50 kobo. Okumu also is paying on Friday 8 naira on Friday. AfriPrudential is also paying 15 kobo. So let us take advantage of dividend payment. Let us reinvest back, lower our cost for people that have came in at high price. We can lower our average cost. Let's reinvest our proceeds from the dividends, and we enjoy once the market bounce back and we maximize the available opportunities. So I've come to the end of the equity market review and projection for the week. So thank you. The time is now open for questions and answers. If you have any questions, the floor is open for questions. Questions, if you have questions, kindly signify by raising of your hands if you have questions. Question, the floor is open for questions. So you are muted, sir. You have the floor, sir. Are you loud? You are muted, sir.
Good morning.
Morning. Thanks for joining us.
Yes, good morning. Good morning, everyone. My name is Adebola Oshipora. Please, I would like to know why you always, why you always exclude Oando from your recommendation list. Thank you.
Okay. Thank you for that question, sir. The reason is currently all our recommendations are based on fundamentals, their results. So currently we don't have the results of Oando. The last result they released, we can't recommend based on that result until when their result, at least the first quarter result for 2023, before we can now say, okay, they are doing well and we can recommend them to our clients. So we are excluding that based on what their results is not out for 2023. So we can't recommend them to our clients. So if anyone is buying, that would be on a personal level, but we can't recommend until when we see their results, their performance before we can now authoritatively tell our client that they can invest in Oando. So we have another question. What can you say about the movement in Oando share? We knew what happened after the court judgment that the minority shareholders cannot be forced to sell at 7 naira 7 kobo. So that has led to gain in that stocks. And we know what they have done both in upstream and downstream sectors. And people believe that they have what it takes to compete with others in that sectors, like Seplat. If Seplat is trading for over 1,000 and others, why not Owando with all their capacity, they should be able to want to trade more. That is the what investor sentiment. It's not that there's any result to back up that. It's just investor sentiment. I believe that based on what they have now, they should be able to what post positive results and be able to overcome all the debt that they have incurred in previous accounting year. So apart from that, we don't have any result to support that. That is why we are not recommending it to our investors. So questions, if there are questions, the floor is open for questions. So we have another question. What is about Transcorp? Is it good to buy now? So I don't know the Transcorp. There's Transcorp, Transcorp Power, there's Transcorp Group. So I don't know so you need to be specific about the Transcorp. For the Transcorp Group, it's good to go. You can buy for the Transcorp Group. We recommend that. It's part of our recommendations. Okay. So it's part of our recommendation. It's good to go. We know they hold 50 stake in power, in Transcorp Power. So we believe they will post good results. So give us the sole performance of banking sector for past 15 years. So Yetunde Oyekunle. So we get back to you on that. The 15 years before performance of banking sector, we get back to you on that. And we believe that based on antecedent, what the banking sectors have been doing last year, they topped the market with their performance. And we always believe that in interest environment, the banking sectors and insurance sectors will be at least most beneficiary of what will be happening in that sector. So we send you the 15 years results later. So we contact you, sir. So if the floor is open for questions. So how can I get all my investments in one place? So for the client, what we do is for us to have a global search on all your investments so that we know where they are, whether they are in any other investment house or they are still in material form. So all we just have to do is send mail to our customer service. We pick it up from there. So we're happy to do a global search, then do the needful on all your investments, whether we need to move them to our house or we need to do dematerialization, depending on the current state of your investment. So send a message to the customer service and we'll pick it up from there. Okay. So sir, I have asked question before, how can I claim all my dividends? Sir, all you just have to do is for you to send mail to customer service, we pick it up from there. We look at your portfolio and then send you the dividend form and the share transfer form for us to process all your outstandings that you are having. So just send message to us. I will also call you, sir, Mr. Deneshi. I will call you after the message. I will reach out to you and then help you to process all your outstanding dividends. Thank you, sir, for the. So any other question? So what can someone do to claim all the past dividend not paid? So if the dividend are still within 12 years, so you still have right to claim them. So any dividend that is above 12 years, you cannot claim them. But for the dividend within 12 years, you still have access. You can claim all your dividend. All we just have to do is for us to look at your portfolio, Then we look at the stocks that you have not received your dividends. We share the e-dividend form to you and then the share transfer form. So we help you to process it. So just reach out to the customer service and we respond promptly to your request.
All right, thank you very much for taking out the time to join. With this, we've come to the end of the session this morning, and we do wish you all a very productive and happy week ahead. Thank you.